Hi,
You may,
good afternoon,
yeah.
everyone. Thanks a lot, MC. Well, first of all, I like to wish everyone thanks for joining the webinar and wish everyone a happy and prosperous 2022 after a very mixed year in 2021. Yeah, just let me share my slide. So today I'm going to talk about sustainable investing. I think some of you will know it as ESG investing. Right? ESG basically stands for environmental, social, and governance. Yeah. I think so far the world, I think, has become a better place over the last 20, 30 years. Yeah, but there are still many challenges and issues that we need to resolve. I think one of the biggest issues that we are aware of is global warming, and with that, we have already seen fire, drought, and closer to home, we have seen flood. Other issues that have concerned a lot of people are poverty, inequality in terms of access to education, access to hospitals, access to proper sanitation, right? Access to good living conditions, and so forth. That's what some of the pictures here have shown. Yeah, and the situation has become so bad, right? That the world has get together where about 197 countries, or 196 plus EU, have come together to have a conference to try to resolve one simple issue, which is climate change. Right? I think what they've been trying to do is like they're trying to reduce climate change to less than 1.5% by 2030. Yeah. Because I think if we don't do anything at this point in time, the climate or the temperature is going to go up, maybe estimated to be about 2.5%. And with that, we are going to see a lot of issues. Right? So what ESG is coming about is like the awareness on ESG investing or sustainable investing has become very popular in recent times, right? And the reason is actually very simple. People are now becoming more wealthy and they are more aware of all these social issues as well as environmental issue. So what they are trying to do now is that fund houses are now trying to combine, right? Companies that can resolve some of the ESG issues, right? And they think that companies that do all these ESG issues or resolve the ESG issues very well are going to give you very good return from an investment perspective. Yeah. Now, this chart here shows you how much the growth in ESG investing has been. Okay. AUM here stands for asset under management. If you look at the column on your furthest right, it shows you the average growth rate per year. Yeah, and you can see that if you ignore Europe for the time being, United States, Canada, Australia, Japan, right? The growth rate from 2014 until now, when it comes to ESG investing, is tremendous. We are talking about a minimum of 17%, with Japan rising all the way to 168% into ESG investing. Right? Now, Europe is at the moment at the forefront of ESG investing. But if you see the number of 1%, that's slightly a bit misleading, because what happened is Europe, they are at the forefront and they are also the strictest when it comes to ESG investing. So what they have done is that for you to be categorized as an ESG fund, there are a lot of requirements that you have to meet. Right? So therefore, because of that, some of the funds or many of the funds did not meet the requirement, and they have been recategorized into some other category, which is why you see the compounded growth for Europe is only about 1%. Yeah? So the total AUM under ESG end of 2020 is estimated to be around 35 trillion. Okay? Closer to home, this chart shows you, this is, earlier we saw it on an annual basis, this one is on a quarterly basis. This shows you the Asia ex-Japan asset under management for ESG funds. Yeah. And you can see that towards the second quarter of 2020, we are seeing a sharp rise in terms of ESG investing. Okay. So the total AUM for Asia ex-Japan ESG investments as of end September is estimated about 61 billion, right? This is a very low number compared to 35 trillion earlier. Yeah. And I think, like, you know, as awareness grows, the AUM is going to increase tremendously. Okay. And what is even more exciting is some people think that ESG investing might not be as profitable as conventional, but that is a wrong perception. Okay. If you look at these two bar charts, it's not bar charts, right? Two charts, right? These two charts basically shows you, I plotted an MSCI ESG, okay, the top chart, MSCI ESG All World Index against the All World Index conventional over the last 12 years. Okay, and you can see that the blue line, which is the MSCI ESG index, has slightly outperformed the conventional. Okay, what is more impressive is if you look at the table on your right-hand side, right? The annual performance for each calendar year, right? Out of 12 years, ESG funds outperform conventional index 10 out of 12 years. Okay. Now, if you look at the chart on the bottom, this is more specific to ESG investing in Asia Pac ex-Japan. Okay, and the blue line shows you that the performance is a lot better than the conventional index, especially over the last 2-3 years, where awareness have actually grown in Asia. Okay. And you see that the index, ESG index, has outperformed the conventional index by 72%. Right? And again, if you look at the table on your right-hand side, the annual performance, again, ESG outperformed conventional in 10 out of 12 years. Right? Yeah. Next, this is to show you, okay, how profitable ESG funds can be, because we have already established that ESG index can outperform the conventional index. Okay, now these two charts show you two of our funds, the AmInvest Sustainable Series Positive Change and our Climate Tech Fund. Okay. And you can see that the two funds, the first one, the launch date is sometime in it's sometimes in May 2018, right? It has outperformed, or rather it has rose about 149% since inception until end of 2013. Okay. Compared to the benchmark, which is only up about 60%, right? The chart at the bottom, okay, the inception date here is 9 of April 2019, right? And until end of this December, the fund is up 60% against the benchmark, which is only up about 55%. Again, you see very strong outperformance, especially over the last 1.5 years. Yeah. And on an annualized basis, both funds are doing very well. The annualized basis, which means the average return per year, for the top fund here, positive change is 28%. For the climate tag is 25%. Yeah. And the reason why these funds are doing very well is because they are invested in companies that are able to mitigate or resolve some of the ESG issues, right? And because they can do that, there is a lot of demand for the services of these companies, right? Which is why the share price has been going up, and which is why we are getting such a good return on these funds. Okay. Now I'm going to talk on, why the theme of these funds and why these funds are set up. Yeah. Okay. Now, the first one, for the first fund, the sustainable series, right? The reason why the fund was set up was that the fund manager thinks that, there's a lot of issues where we do not have proper access to things like clean water. We do not have access to proper sanitation. Other things like they are looking at is we have climate change issue, right? And climate change issue would involve things like drought, decarbonization, fire, flood, and what have you, right? And then, of course, the third issue that they actually have seen things like inequality. Basically, what it means is poverty. They estimated that about 767 million people in the world are living in poverty, and they are living in less than $2, which is less than 10 ringgit a day, right? That's how bad it is. Right? So what the fund manager has done for this fund is that they are now saying that besides investing in companies that can do good for the world, they are taking it one step further, which is something called impact investing. Okay. Impact investing is basically like what is stated here, the intention to generate measurable social and environmental impact alongside a financial return, right? So they buy good companies which give you good financial return, but they also want to do a little bit more. They want to measure what kind of return that we are getting socially as well as on an environmental impact. Okay, and if you look at the table, okay, it's a little bit small. The table on your bottom left, yeah. This is a report that is published by the fund, right? That shows you, okay, in 2020, through their investments, okay, what is the result? So, for example, they save about 70 million metric tons of CO2 by investing in companies that does not use a lot of fossil fuels, right? They also save and prevent, help people for about 540 million people through medical care, right? And they provide access financial services to over 1.5 billion people. Okay, I will explain later why some of these numbers can come about and what are the companies that this fund is invested in. Okay. Now, the second fund that we have is called the Climate Sustainable Seas Climate Tech Fund. Yeah, the Climate Tech Fund is a lot more specialized, where they invest only in companies that can help when it comes to climate change. Yeah, so when the reason why they have this Climate Tech Fund is really to help reduce or prevent anything that affects climate change. So in this case, forest fires, sea levels rising, cyclone, hurricanes, things like that, flooding, right? So they look for companies which are helping to cut greenhouse emission, companies that goes into renewable energy, and they also into companies that are now trying to improve in terms of energy efficiency. Right? The reason why they are doing all this is that based on their study, they found that due to climate change events, right, the world has on average over the last 50 years, yeah, lost about 200 million US dollars of economic losses per day, okay, due to all these natural events. Right? Those are very big numbers. Right? Therefore, they think that if they invest in companies that can resolve some of these issues, the financial return from these investments is going to be very good over the long run. Okay. Okay. Now I'm going to talk a bit about excuse me, the investment philosophy of both the funds. Yeah. Now the first one on positive change, right? Positive change fund, we take the philosophy is that they think that investment is very important, because you need investment to generate return in the long run. Okay, and when we talk about investment here, we are talking about not only the to return to environment, social, but also financial return. Okay? And they talk about investing in high quality companies that can address society challenges, right? And they think that companies that can address these society challenges will prosper in the long term, okay, naturally, right? And the third one is that any investments has to be long term, because it takes a lot of time to change and for certain services to be accepted, right? So most of the investments like this fund will have, the investment horizon is for more than 5 years, right? And it's very much on a bottom-up approach. And this company, Baillie Gifford, which is the target fund which is the fund that we invest in, they have more than 100 years when it comes to ESG investing. Okay. The second fund, the target fund manager, which is DWS Invest, right? The climate tech fund, their philosophy is to focus on climate change implications, right? And what are the companies that can resolve these implications, right? These funds are very actively managed, right? And they spread their investment on a multi-cap basis, right? Companies, so they like companies that can capitalize on the circular trend in the field of climate tech, basically companies that can grow and take advantage of the climate changes. Right? And they have very good research, DWS, to provide thematic insights and know-how when it comes to ESG investing. Okay. So the two biggest change between these two, the two biggest differences between these two companies is, for the positive change, the companies being invested range from between 20 to 50 companies. So it's very focused. Whereas the DWS, their number of companies invested range from 50 to 80. So it's a lot more diversified. Yeah. Here, I'm going to talk a little bit about their investment target for both the funds. Yeah. Now, for the positive change fund, yeah, again, the four things that they like to focus on is, number one, social inclusion and education. Right? They think that by reducing education gap, it will help to reduce social inequalities. Also, they also want to reduce the economic or access to education as well as learning potential. Right? Second is they also like companies that can help to resolve environment and resource needs, right? Basically to reduce the carbon usage globally, right? Okay. Of course, third is healthcare and quality of life, companies that can actually improve our hospitalization, our medical care, as well as to prolong our life, like vaccines for COVID. Right? And of course, the fourth one is base of the pyramid. Basically, it means the people who are at the bottom rung of the economic cycle. Yeah. Okay. So some of the investments that they have shown here, say for example, to reduce inequality, for social inclusion and education is Mercado Libre. Mercado Libre is a little bit like your Lazada back here, but this is a company that is listed in US, but they operate in South America. Their HQ is in Argentina, right? So by having all these platforms like eBay and Lazada and so forth, it allows the small enterprises, home businesses to actually sell their products, right? So they also put here for environment and resource. It's listed, they invest in Tesla, which is very easy. Tesla is electric vehicle, so that replaces the fossil fuel, which is petrol and diesel for our average cars, right? And then the third one is Moderna. Moderna, I'm sure everyone is aware, Moderna is one of the major provider of COVID vaccine through their mRNA technology, which is being used to create a lot of medicine for a range of products. Yeah, and of course, base of pyramid, they put an example of Safaricom. Safaricom is basically in Africa. It's a telco provider, but it has gone a bit more to provide just telco services. They also come out with software, accounting software, where small business users can use that accounting software to do their accounting, make payment, and so forth. So that again helps. They also do financing. So that all this helps the small businesses, okay, without access to finance, because most of the time the banks might not lend money to them, to have access to financing as well as access to a market and to accounting so that they can set up a proper business. Yeah. Now, for the climate tech fund, right, they invest more on climate tech, as we have mentioned, right? But their full focus are, what are the companies that can provide alternative drive systems? So in this case, it's your electric vehicles, for example, renewable energy, basically moving away from coal-fired plants, right, and move into renewable energy like solar panel, water, and wind. Yeah. Then transportation of energy, basically making things becomes more efficient when we try to when we do transportation. And that's of course energy efficient buildings, basically making sure that the buildings are become smarter and uses less power to cool down the buildings or to heat up the buildings, depending where you are, right? And of course, the other things that they look at are things like medical, right? Innovation in terms of water supply, high-tech agriculture, and climate-friendly nutrition, which I will talk about later on. Okay, now this is an investment process. I shall not dwell too long on this, but rest assured that both the funds or both the fund managers, right, they have a very disciplined and very systematic process when it comes to assessing investments. One, from a financial perspective. The second one is from an ESG perspective, right? So both are very thorough in their process, especially to go through the ESG, and in order to be classified as an ESG fund. Yeah. Now, here give you a sense of where the investment is 2 months ago. Yeah. So if you look at the positive change fund, right, about 49% of their investments are in companies in North America. Okay. Europe is about 25%, right? And developed Asia Pac is about 3%, is quite small. So emerging market is spread out about 20%. Right? Now you see for climate tech on your right-hand side, again, the distribution is fairly similar. US is about 48%. If you add up Europe, it's roughly about 28%, right? And then you have other countries, right? So geographically, the investments are pretty well spread out and they are almost the same. Okay. Now, here, just to give you a better perception or a sense of what these funds are doing and what are the companies that they are invested in, right? Now, if we start off with the positive change fund, right? You can see like the top holdings here. Companies like ASML and TSMC, number 1 and number 4, are basically semiconductor companies, right? So part of the reason why semiconductor companies are considered as ESG funds are because semiconductors are being used in our integrated circuits for technology, as well as to run a lot of very complex items. Yeah, so they are considered as enablers of technology, right? So which is being used to help the world to become a better place, because it's being used in cars, being used in phone, computers for communication, and as well as to manage buildings efficiency when it comes to temperature control and so forth. Yeah. So now, besides the core function of these companies, which is to make computer chips and semiconductors, chips, both the companies have also gone above. For example, we all know that semiconductor companies uses a lot of energy, right? Because to make the wafer chips, you require a lot of water as well as energy, right? So both companies are now very committed to use only renewable energy, instead of using fossil fuel, right? So that's one way that they're proving to investors that they are going ESG, right? They have also proved that they are becoming more efficient when it comes to using water to clean their wafer. Yeah. Second companies, Moderna, I think we all know. Moderna mRNA technology to do vaccines, as well as to come up with cures for quite a lot of diseases, right? This is one of the forefront of medical technology at the moment in the world. Okay. Tesla, obviously, we all know about Tesla electric vehicle. For those who are interested, I was just looking up the price of Tesla. In Malaysia, the cheapest Tesla car, the Model 3, is about 288,000, and the most expensive is about 488,000, right? So something for you to consider if you want to reduce your carbon footprint. Yeah. Then we have companies like Dexcom. Dexcom is a glucose monitoring machine. So for diabetic people, right, what this does is that you actually put a sensor underneath your skin, which will then monitor your glucose level in your body. So it becomes a lot easier for us to manage if you have high glucose level in your body, right? So Mercado Libre, I think we have spoke about it. So the other thing, so now I move on to climate tech. Yeah. So,
Mr. Chung,
yes.
So sorry about that. The time is almost up. So can we move on to Q&A?
Okay, yes, we can.
Yeah, so sorry about that, yeah. All right, so there's one question here. Most of the ESG fund you are talking, is concentrated in the US. Do we have any ESG Asia ex-Japan fund? And because since US might be in downturn territory of the interest, due mainly to the interest rate rising policy, environment.
Okay, I'm sure we have ESG funds for Asia Pac, but at the moment at AmInvest we actually have one which is a global sustainable series, right? Okay, one of the reasons why at this point in time, if you look through the geographical data in terms of investing, that most of it are in US and in Europe, is for one very simple reason. For these countries, they are a lot more advanced when it comes to dealing with ESG issues. So the government there is a lot more proactive, and the companies themselves are a lot more proactive. So to give you an example, in Europe, they have something called taxonomy, right? Which Malaysia is now trying to adopt. I think Bank Negara is now currently looking at it. Yeah. So what this does is that taxonomy helps to, is a text code that helps you to identify what are the things that you are doing that is currently ESG compliant, and then you can offset with taxes and so forth, right? Now, to cut the story short, in Asia, ESG investing is still fairly new in Asia. It only happens in the last 5 years. So not that many companies have adopted to it. So it will take time for Asian companies, right, especially in the emerging markets, to really adopt their practices. Right? So if you see now, right, in Malaysia, for example, companies now are required to actually report on what are the ESG that they have done, for their companies, right? So that is why the markets for ESG companies, all right, or sorry, the universe for ESG companies in Asia at the moment is a little bit not as big as what you see globally. I hope that answers the question.
Yeah, thank you so much, Mr. Chung. So the time is already up, and yeah, we will move on to our next speaker for the next section. All right, thank you so much, Mr. Chung, for your insightful sharing on the ESG topic today. And we hope that the investor right now still staying with us do grab some insight over the ESG industry. Right? Thank you so much, Mr. Chung.
Thank you, and I'd like to take the opportunity to wish everyone a happy Chinese New Year, right? And a prosperous one, and hopefully stay safe. Okay, thank you.
Thank you so much. All right, thank you.